Welcome back. What a crazy housing market we have right now. So for example, there's approximately 550,000 fewer houses for sale nationwide this September compared to the September average in 2017 through 2019. One of the main reasons why we have a lack of existing houses for sale is because the number of new listings this year is well below the past 6 years. Houses are also taking longer to sell compared to the past couple of years, but they're still selling faster on average compared to September 2017 through 2020. So in today's housing market update, I'm going to share a brand new report from Realtor.com, which covers the entire month of September. This is actually the first housing market update I've seen that covers the entire month of September. So for example, other companies such as the National Association of Realtors won't publish their September's numbers for another 2 weeks. And on top of that, the CoreLogic S&P Case-Shiller Index just announced last week home price trends for the month of July. Thank you so much for joining me in today's video. I appreciate you. By the way, if you guys haven't subscribed to this channel just yet, I post frequent housing market updates. And also, we're getting very, very close to reaching 100,000 subscribers. So let's get to that by year end with your help here, of course. So thank you so much for doing that, and let's begin today's video. So here is a Realtor.com's latest housing market update just announced yesterday at the time of filming this video here. It says August's surprise increase in newly listed houses was very much short-lived as new listings decreased once again, following more typical seasonal patterns for the month of September here. If you guys recall, 1 month ago, I report to you guys how the number of new listings actually increased in August, which was highly unusual because we should expect a decrease, but this year it actually increased. But that is short-lived though, because for the month of September, it decreased once again. However, though, the number of houses for sale or house inventory actually increased this September compared to August, which is highly unusual. In addition, as a note right here, there are some additional signs of an adjustment ahead here as a share of home listings that have reduced their asking prices last month, which was September, increased more than expected for this time of year. However, buyers continue to contend with high listing prices, rates, and lower inventory this year. Speaking of that, housing inventory nationwide this September was down 4% compared to September of 2022. However, though, the gap between this year and last year is shrinking as the inventory of the number of houses for sale in September grew by 4.9% over August. So this may be a little bit confusing here because inventory grew by 4% compared to 12 months ago. However, inventory increased by 4.9% on a month-to-month basis from August this year through September. That is higher than the typical seasonal trends that we saw pre-pandemic back in 2017 through 2019, when inventory should remain flat. So during this time of year, when looking at pre-pandemic levels, inventory should be flat from August through September, whereas this year it increased by nearly 5%. However, having said that, this small increase of about 4.9% still means that we're still down by about 45% compared to 2017 through 2019. This means we're missing approximately 550,000 fewer homes for sale this September compared to the averages looking back at 2017 through 2019. Let me share a chart from Realtor.com, and then I'll share some trends from AltosResearch.com. So this is a little bit confusing here, but I really love this because other companies such as Redfin only share data going back to 2020 when going on to their Redfin data center here. But Realtor.com is providing numbers looking back through 2017. So here is 2023. This year, the green line right here is inventory levels back in 2021. And here is 2022 in gold. This line right here is 2020. Absolutely crazy to see how inventory was tanking from June all the way until the end of the year, whereas 2022, basically moving the opposite direction here. In any case, here's pre-pandemic levels, 2017, 2018, as well as red here is 2019. So right now there's about 700,000 homes for sale nationwide, which of course is higher compared to 2021, but below levels from 2017 through 2020, as well as 2022, of course, as well. But at 700,000, when looking at this level right here, the average pre-COVID levels was around 1,250,000 homes for sale. Now we only have about 700,000. So we're missing approximately 550,000 fewer homes for sale right now. One thing I'll mention, I actually talked about this last year because we don't need to see inventory right now increase to pre-COVID levels in order to see prices decrease. Remember what happened last year, right? So let's just look at this. I'm just kind of going off cuff here. But in, when was this? In May through basically the end of the year, inventory was increasing, especially in May, June, and July, big increases in the number of houses for sale last year. And that caused the home prices to fall greatly in the second half last year, right? Even though back in July, we were well below pre-pandemic levels. So back then there was around 700,000 homes for sale compared to around 1.2 to 1.3 million in 2017 through 2019. So there wasn't any other month here in which inventory was actually over 800,000, whereas inventory levels were much higher compared to 2022. I mentioned that because I don't want you guys to think that we need to see inventory levels increase to 1.2 million in order to see prices decrease. Because last year, we didn't even come close to pre-COVID levels. What really happened was the sharp increase though, because back in April, we had around 375,000 homes for sale. But by the time we hit July, it was at 700,000. So more or less in the span of about 3 months, inventory levels doubled, which of course shocked our housing market. And that's one of the main reasons why prices tanked in the last half last year. Not because inventory levels increased to the historical norm that we saw back in 2017 and 19. One more thing I do want to mention regarding inventory levels is this highly unusual increase because as you can see in 2017, for example, inventory levels peaked in August. In 2018, they peaked in October. I believe that was because we had rates increasing to 5% by the time we hit October, November, which increased inventory levels to a higher level than was normal. Back in 2019, inventory levels peaked in July. So again, it's highly unusual to see inventory levels still increasing for the month of October, or not month of October, the month of September here. So it's going to be really interesting to see what happens here because if demand falls off a cliff here, we see a huge pullback in closed home sales, which I imagine what will happen if we have these high rates close to 8%. We should expect to see inventory peak later this year. Okay, let's change gears slightly here and talk about the number of pending home sales, a measure of contracts being signed between buyers and sellers. It says the number of houses under contract with a buyer but are not yet sold decreased by 12.2% compared to the same time frame 1 year ago. This decline is higher than August's 11.5% decrease. So right now it's down by 12.2% year over year. Last month compared to last August, it was a decrease of 11.5%. However, though, it's still much improved from the giant decrease of 36.9% that we saw in December of 2022 compared to December of 2021. Nevertheless, though, higher mortgage rates in July and August impacted September's inventory of houses under contract. So when looking at this chart right here, pending listing count, this is the total number of houses under contract. So the total number of houses that are in contract with the buyer in which it's going to be a closed home sale in about 1 to 2 months. This is not a measure of newly accepted offers or new pending listings. This is a measure of the total number of houses under contract with a buyer as of September. And again, that's down by 12.2% compared to September of 2022. It also says here that pending homes are an early indication of the direction of closed home sales because that cooled at a much slower annual pace this August, according to the National Association of Realtors, because their seasonally adjusted annualized rate of closed home sales of existing houses this August was just over 4 million sales. That is an insanely low number because excluding 1 month this year, which was back in January, when the sales pace was at 4 million, that's the lowest sales pace or the slowest sales pace going back to about 13 years ago. I mention this because the rise in rates should impact closed home sales and, of course, contracts being signed as well for the remainder of the year here. And keep in mind as well, I'll mention this again because at 4.04 million, that's a sales pace this August, according to NAR. Again, very close to a 13-year low for the month of August here because during the winter months, we tend to see a huge pullback in sales, especially in November, December, and January. But keep in mind, this is 4 million closed home sales, that pace for August. So I would imagine we're going to see a huge pullback in the number of closed home sales in the months ahead because of seasonality as we approach the holidays. And of course, because rates have been absolutely spiking as of late, increasing to nearly 8%, the highest levels since October of 2000. All right, let's change gears slightly here and talk about the number of newly listed houses for sale nationwide here. So new listings were 9.1% below last year's levels. It says here, while newly listed houses showed an unusual increase in August compared to July, as reported to you guys 1 month ago, higher rates and more typical seasonality have reset that trend because new listings are decreasing once again. Higher rates are impacting selling activity through homeowners feeling locked in because they have very low rates that they don't want to give up. So they don't want to sell their houses at a 3% rate and buy a new home at 7.5% or 8% for that matter. It's just pretty wild to see that rising rates is really impacting new listings so much because so many people do not want to give up their very low rates. So rising rates are impacting demand, but also they're impacting supply as well. As you see right here, new listings falling by 9.1%. So here's that small, very non-seasonal increase that we saw in August, but that trend has been reversed now because now it's going down, which is what we should be seeing during this time of year. In fact, new listings should be decreasing starting in the summer months, but this year, very unusual over the past couple of months now. But at least now we are seeing a seasonal decrease right now. It's also important to note here that there was approximately 358,000 new listings this September, but this is well below 2017 through 2021. Because back then there was around 450,000 to 500,000 newly listed houses. In regards to inventory levels at a metro level here, out of the 50 largest metros, inventory decreased in 37 of them compared to September of 2022. However, though, I keep on saying however, but in any case, some southern metros still saw a significant inventory increase, such as Memphis, Tennessee. Look at that. Inventory increased by 35.6%. New Orleans increased by 28%. And San Antonio, Texas saw a gain of 24.4% in the number of houses for sale year over year. Despite higher inventory growth compared to last year, though, it's still well below pre-pandemic levels. In fact, among the 50 largest US metros, there was only 2 of those that were up compared to the average 2017 through 2019. That was Austin, Texas, a gain of 7.5%, and San Antonio, Texas also saw a gain of about 5%. In regards to the number of new listings, there was only 2 of the 50 most populous metros that saw an increase compared to the previous year. Those 2 metros was San Antonio, up by 4.4%, and Buffalo, New York saw a gain of 2.1%. The biggest decreases on a year-over-year basis was Las Vegas, new listings tanking by 32%, After that was New York and Detroit. In regards to how fast or how slow houses are selling right now, the typical home spent 48 days on the market before the seller accepted an offer. That, by the way, is 1 day longer compared to last year, but it's still taking about 2 weeks less to sell a house compared to the same month in 2017 through 2019. Here's exactly what I mean by this, because this September, days in the market was at 48 days, which means it took about 1 day slower to sell a house compared to the same time frame in 2022. Now, having said that though, we're still selling houses about 2 weeks faster compared to pre-COVID levels. Let's also discuss the share of price reductions right now, because according to Realtor.com, that share is at 17.8%. So nearly 20%, which means on average, about 2 of every 10 houses for sale have reduced their asking prices. This, for whatever reason, is about half the share that AltosResearch.com is reporting though. So Realtor.com is announcing a 17.8% share, but according to AltosResearch.com, this, by the way, is a 7-day average, not the entire month of September here. In any case, these numbers are much higher compared to Realtor.com though. So according to Altos Research, for the 7 days ended September 29th, the share was at 37.53%. A little bit lower compared to last year at about 42%, but roughly on par with pre-pandemic levels in 2019 as well as 2018. Now, here's something that Realtor.com noted, which I have been reporting to you guys as well, because they say here the growth in the share of reduced price listings is beginning to follow last year's pattern of accelerating in the fall season as high listing prices and, of course, high rates are pushing the limits of what buyers are willing to pay. When this occurred in 2022, monthly prices slowed faster than was typical in the winter. Another way to say this is that prices decreased much faster than was normal, contributing to lower prices seen in this year's peak months. So what they're basically saying here is that we saw a fairly significant sharp increase in the share of reduced price listings, going from about 16% in August. Now it's at nearly 18% right now. This is a sharp increase, but I just kind of want to provide some context here. So for example, back in March 2022, the share of price reductions was only 6%, very, very low levels. But look at this trajectory though, because in March at 6%, by the time we hit, when was this? July last year, the share was about 19%. So in other words, in the span of about 4 months, the share of price reductions tripled, which is of course absolutely insane, which caused prices to tank last year. Whereas this year, back in, when was this? In March, the share was about 13%, or actually a little bit closer to 12%, and now it's only at 18%. So even though we are seeing a sharp increase this September, it's not even close to the giant increase we saw last year. Of course, a lot could change though, right? Because we'll have to keep a watchful eye on this, because if the share price reductions absolutely skyrocket, and if new listings start skyrocketing again as well, of course, this would be a recipe for a disaster of our housing market. So of course, I'll definitely keep you posted with the latest developments here. They also shared how each of the 4 major regions fared here. And this is a combination of the 50 largest metros here. So in regards to active listings, or the number of houses for sale, or the percent change on a year-over-year basis, we saw a big decrease in the West, down by 27.7%, whereas the South saw a gain of 1.5%. Also, new listings fell by double digits in the Northeast as well as the West, and also decreased by about 8 to 9% in the Midwest and also the South. In regards to days in the market, a negative sign right here for the Midwest, the Northeast, as well as the West, means that houses are selling faster compared to 1 year ago. So for example, in the West, houses were selling about 4 days faster compared to 2022. Now, here's something I really like about their report here, because they not only share year-over-year data, but they compare this to pre-COVID levels here, which the numbers are just crazy different here. So in regards to active listings, I mean, look at these metros here. There's in the Northeast down by nearly 60% in the number of houses for sale this September compared to the September average in 2017, 18, and 19. Also, giant decreases in these other metros as well. So for example, in the South, even though it increased by 1.5% compared to 12 months ago, it's a big decrease of 34% when looking at pre-COVID levels. And of course, one of the main reasons why we're seeing this huge pullback of houses for sale is because new listings are falling greatly, falling by double digits for each of these areas here. The West, in fact, fell the most, down by nearly 34% here. And also houses selling about 2 to about 3 weeks faster in the Midwest, the Northeast, and the South, whereas they're selling about the same time frame in the West compared to pre-pandemic era. And lastly, Realtor.com provided each of these 50 biggest areas and how they change compared to asking prices, active listing count or housing inventory, new listings, days in the market, etc. here. But instead of going over every single city, I'll just leave a link below to this article here in case you guys want to see any city here on this report here. If I went over this entire section here, this video would be 15 hours long. But that is today's video. Thank you so much for watching today's video. Also, please consider subscribing as well if you haven't done so already and help me reach 100,000 subscribers by year end. I appreciate you guys so much. Hope you guys have an awesome day and look forward to seeing you on the next video.